Hey everyone, welcome back to my YouTube channel. So it's been a couple of days since I recorded myself taking a trade. The reason is that I've been kind of busy lately. Also on top of that, I have been taking trades. It's not like I haven't been trading. I've been trading mostly on the Forex scene. I've been practicing and backtesting one of the strategy that I have been developing, and I'm trying to see what works out for me and what works out in most scenarios, and I'm just trying to get more and more used to it. So that's why I've been kind of busy too, so I haven't been able to record. And mostly because when you record every single trade that you take, it kind of takes the fun, the personal joy that you get out of taking the trade as well. So for those reasons, sometimes you just want to do things during your personal time, and I'm sure like most traders would understand that. Anyways, so today I've already entered a trade right now, so I'll explain the logic behind the trade. So I wouldn't call it like an A plus setup, but it could potentially be an A. I'll explain the entire logic, but yeah, obviously there is a very like 80% chance that this will definitely come to TP. But seeing the how the previous price action has been like for the last for how many, let me just check in the 1 hour charts. Yeah, for the last like 4 hours or 5 hours or so, if you check, yeah, there is like you can't, there is little bit of the price action isn't that nice to really call this a 80%, call this a high win rate trade, high chance trade, but still I'll explain the logic behind why I've taken it, and mostly might be a swing trade. So we have taken this trade on gold, and first of all I'll just start with the higher narrative. So if you see the 4-hour chart, gold, if you see right here, I have been tracking gold for a while, and if you follow the trend line, obviously trend lines are for retail traders, but still, just for the sake of the understanding, gold has been in an uptrend and it has been respecting this trend line for a very long time. And finally, I think in the 4 hours, if we see, I think how many hours, 16, basically a day before or so, like 1 or 2 days back, finally gold has given 12, 24 hours, yeah, 30 hours back, to a gold had finally given a breakdown from this trend line right here, and it even broke this supply zone. So basically making this supply, it broke this demand zone, thus making this supply zone a flip zone, because it led to a failed reaction for this demand zone right here. Therefore this has become invalid, and this supply zone has become the actual main zone in our focus. So it has really pushed the market down, and it has led to a breakout structure. If you see right here, it has taken this previous swing low. All of these are swing lows, but on the major scale, this swing low also has been taken down recently. So there has been a market shift that we observed, and clearly with that market shift, the market has turned from bullish to bearish, at least in the given time frame that we are looking at right now. Yeah, so that's why by looking at these charts right here, the first thing that I did is I form my bias, and my bias obviously has been bearish, as I said, because of the reason that I just explained. I have observed a market shift right here. It led to a breakout structure in the on 4-hour time frame itself. It has led to a breakout structure, and hence you can see that the market has shifted from bullish to bearish. And therefore the bias for this trade I've already set for gold to be I had already set for gold to be on the bearish side. So I wanted to look for a short selling opportunity, and this trade that I've taken right here, mind you, if I'm a little bit distracted, there is some noise, someone's talking outside, so I just thought might have to pay attention there. Anyways, so coming to the after the breakdown, if you check the 15-minute candlestick, right, market, or let's go to 5 itself. Yeah, so the market actually after the breakdown has obviously clearly been making lower highs, lower lows, lower lows, lower high, lower low, lower high, lower low, lower high again, and next lower low. And from here, if you see this is the last lower low right here. I'm sorry, this is the last low right here, and this is the last lower high right here. So this has been my current area of interest, and this swing range right here is the only place that I'm focusing on. So clearly market has been following, the market structure clearly has been looking very bearish, and it has been respecting that bearish trend for a long time now, for the last couple of days. And here, when you see from this bearishness right here, this was an order block formation right here, which led to this entire breakout structure on the smaller scale, or somewhat it'll try to do it at least, but wait, yeah. This order block right here led to a breakout structure here of this low. It took this low out and led to a new low formation. And from there, this order block right here did try to, this order block, this zone right here did try to, go for the next breakout structure. But unfortunately, it did not have enough liquidity in the market. So it did come back to mitigate that side once again. So in the first mitigation, so this could have been one of the entry, but I did not enter there because I did not see that, I did not see the market then. So it did mitigate the zone and start falling back, but again, it failed to completely, it did actually somewhat lead to a breakout structure in a tiny level. But now it's the market did completely pull back in order to mitigate the zone again, in order to collect the remaining whatever sell orders were there. So that it can come back with more liquidity into the market. So then after that, market has been trying, but every time it keeps coming down, it doesn't have enough selling power to just push back down. So due to that reason, the market has been going back up to mitigate the same area of interest again, because this is where the smart money will enter. If you see, anytime the smart money enters, huge bearish candles are formed, right? And right now, there isn't enough liquidity in the market to actually sustain a complete fall. So this trade can actually pull back. The reason I've kept the stop loss above here is because there is for sure liquidity present above this zone as well. So, and this zone is also the previous order block. So it did come to this demand zone to mitigate once and mitigate it second time, but now it hasn't had enough sell orders to actually pursue the journey downwards, right? So because of that reason, it might mitigate couple more times and maybe sweep the liquidity above all these highs right here, because these are all just, in my opinion, these are all just basically inducements. It led to seeing all this, most of the retail traders would have already entered for a early short position. So it's just market manipulation, the big players just trying to before giving the ultimate move, which everyone knows is still to the bearish side, before going there, it's actually trying to just induce, do some inducements and basically trap the retail traders to believe that this is the bearish move, this is when the move will start, this is when the move will start. And every time they enter the short sell position, the institutions are basically pushing the market back up to again grab the liquidity, sweep the liquidity just on top of it. So hunting the stop losses from both the sides and then coming back down again. So maximum, if it fails to get enough liquidity, like if to actually sustain the downfall from here, max to max, what it can do is, if this is not enough, then it will come to this level and hunt the liquidity on top of this zone and finally start pursuing its downfall once again. And I've placed the take profit at the previous high. So actually the take profit should be right here in this zone at the previous swing low, because this entire push to the market push to the downwards is actually to sustain to lead to the break of this to lead to breakout structure of this zone right here in this level right here. Because after it leads to a breakout structure here, then it will start the formation of new lower low, and then it can pull back to form the new lower high and so on. And it has potential to fall for some more time. If you see in the 4-hour time frame, there is still a lot of pathway it can fall to. So obviously here there has been some support, which is why it is actually pushing back up right here, pulling back up right here. But if it maintains to crack open from this level right here, then it can fall to this and then this zone right here. So there is still a potential bearishness in the market despite of the minor pullback, but most likely the pullback is just to invite more liquidity into the market before going for the major downfall. So that is actually what we are looking at. Now, keeping all that in mind, I have okay, there is no pending order. I do not know why it shows like that. I haven't kept any pending order. Anyways, we have already entered the position. As you can see, we have sell. This is the sell position that I've entered. Stop loss is right here and take profit is right here, as I said at the previous swing low. And yes, I kept it a little bit higher than previous swing low for the reason that this for safety reasons, because sometimes it'll come so close and might retract a little bit. So I do not want that. I just want to exit the trade more safely, because it has happened multiple times to me that I've lost the exit because of my little bit that $1 or $2 extra that I try to make, which is actually kind of stupid. Another reason is because another major reason is because, like, if you see right here, it has to obviously, if it's leading to a breakout structure, it's gonna come push down this level right here. But again, I'm just accounting for the spread. So in case after some time, if the spread increases or decreases or whatever, accordingly I just want to give some room for taking into account of that spread. Like, I'm not sure how much spread, how much exactly that spread is, but whatever that spread could be, just want to make sure that because of the spread, it does not lead to not hitting the order or anything, like in case that's playing against me. So I just want that to take that into account. And hopefully, given time, I feel like it's a very guaranteed A plus setup. I mean, A setup, I wouldn't call it A plus. Reason I wouldn't call it A plus is because if it was an A plus setup, then right from here, if you, after these inducements, then, it should have actually immediately went to a breakout structure. But this could also lead that, a failed reaction right here. It could also mean that it could be leading to a market shift. But right now, there is no complete evidence of market shift, because a proper market shift will only happen if it leads to a breakout structure of this previous swing high right here, valid swing high right here. If it leads to a breakout structure above this level, then we can say a market shift has officially happened. But as of now, we are not looking at any market shift. So I can confidently say that the trade is still basically still playing the same swing range, and it is just actually in the pursuit to lead to a breakout structure downwards and continue the bearish move. So hence we have taken this position. It's mostly it might be a swing position. I'm not, because there's a little bit of market has been consolidated in this zone for a while, so it might take a little bit time for this trade to complete. Not exactly sure. I mean, right now, yeah, there is enough base in the market pushing it down, because I think this move right here was a liquidity sweep, so maybe it might have had enough liquidity to sustain this move. Or if you wait for a couple more hours, then we can wait for the next session to open. So I think even then also we might immediately get some a lot of liquidity entering into the market. So we'll wait and see how exactly that would be. And I know obviously there is some demand zones right here and here, so it will have some trouble to break down from that level. Once it breaks down the level, then again this supply zone will become a flip zone in comparison to the demand zone that we observe right here. Yeah, exactly, that's a demand zone. So we will have to wait and watch like how exactly that plays out. That's why it's not exactly an easy trade, but the trade is obviously a logical trade and very much played out. And if you see risk to reward ratio wise, it's 1:3.54, right? 1:3.5 you can take a pretty solid risk to reward ratio as well. So in terms of risk management, capital management, it's perfectly perfect too. So let's see how the trade will play out. I'm fairly certain that it should come to TP, but in case the market shift is happening and it goes wrong, then I'm wrong. Can't do anything about it. But that's why I set my stop loss so that we still protect our capital and we have leeway, we have enough room to actually capture the next A plus setup by waiting. So I'll just keep the trade running now, and once the trade has once trade is done, either in TP or SL, whatever it is, most likely TP, I'll get back to the recording and I'll let you guys know. So until then, peace out. See you soon. Hey guys, so it's only been a couple of minutes since I actually cut the video. But yeah, like after that, the market has been more or less in a free fall. So as I said right here, market was basically waiting to sweep the liquidity above, I guess. So this you see this V movement. If you just move right here, yeah, this sharp V-shape movement, that basically means it's a liquidity sweep. And it has been there is obviously liquidity pool right above these both zones right here. So it just made the sharp V shape, went and swept all the available liquidity on top of that. And from there, market has been pretty much just free falling right into profit. And I guess in any minute now, this trade will be closed and we will have our gold trade right 1:3.5. Anytime now the trade will close. Is this close? Oh, it's touching right. It's because the spread, it hasn't closed yet, as you can see. But you can take a look at the TP and SL set right here. So anytime now it will close. You just wait for one last final push and we close. I apologize for the noise. There is some works going on in my house, so there is some little bit disturbance there. That is also another reason why I couldn't record past few videos, but it's all right. Oof. It came so close, but I didn't hit the TP yet. It's okay, we'll just keep waiting. Because if you take a look, this is the entire reason why instead of keeping at the lowest point available at the previous swing low, I kept it slightly higher, because I said the spread might be a little bit of issue. Anyways, so we're still holding the trade. It hasn't closed yet. I feel like the next push will actually lead to the closing of the trade. So seeing this, I feel like this could also lead to a breakout structure. We wouldn't know. It actually would. I wouldn't mind pushing the TP even a little more further down. But anyways, see, this should be the initial TP right here, actually, in my opinion, because these are the swing lows, right? But it's only because of the spread that I've kept it there. And even after keeping it there, it hasn't hit yet. So we have to wait. It's just a minor pullback that's happening right now, but shouldn't be an issue. Just waiting to grab some liquidity, because some people might have entered the orders in between. So we'll just go up and down a little bit and grab, sweep more liquidity available in the market, and pretty much just then free fall right into a profit right there. So we just have to wait a couple more minutes and I think we'll be good to go. And this was a very simple 1:3.5 trade. It's very simple. We just look at the higher time frames first and build a narrative and find our daily buys and what exactly is the trade that we're looking at today. And once we form the buys that we need, after that we just need to look for a good entry model. And the entry model most likely would be to find order blocks and then see if it's coming back to mitigate the zone or not. Because after it mitigates the zone, then most likely, a lot of liquidity. Just maybe look out for inducements and traps, and then we wait for any liquidity sweeps. And then if you enter the trade, it'll be much more better. So it'll like I entered the trade after which liquidity sweep has happened, but I entered because I felt like, even if liquidity sweep happens, it should be fine, because I'll keep my stop loss enough that, I can sustain if at all there is any liquidity sweep as well. So that's how I entered the trade. Right now it has come very close to my TP, but it is pulling back a little bit, but maybe it might take a couple more minutes after the pullback to get over and then finally free fall back into my TP. But I'm patient and I'm not going anywhere, so it's fine with me. Anyways, so once you find a good entry model, then best place, since my entire area of focus has been this swing range right here, between the swing low and swing high. This swing range is the entire area of focus that today that I'm trading in. And over there, I'm just looking for this breakout structure to happen. So I'm pretty certain, given the entire bearish trend, this breakout structure has to happen for the new lower low to form, right? Very simple. Maybe, yeah, not exactly now. It might take a couple more hours before it leads to a breakout structure and forms. That I'm not sure of. But one thing I am sure of is the fact that if the bearishness is going to continue, then obviously it has to lead to a breakout structure right here, and only after the breakout structure happens, a new low will be formed. So I'm just entering in a very good position where good supply is there, and wherever the smart money is likely to enter, I entered the position there, and then straight from there I'm just for my exit, I'm just keeping targeting the next breakout structure, and from there it should be like a pretty simple free fall trade. So that's what we have actually kept right now. And yeah, like after coming very close to our TP, there has been slightly little bit of pullback right here, but that pullback should be normal because it's just trying to facilitate the push. So we just have to be a little more patient for our trade to close. And yeah, there is one part of me, to be very honest, like wanting to change the TP right now, not upwards actually, to pull it a little more downwards to keep it much more closer to the breakout structure right here. But then that would mean I'm just going against, I'm not against, like I'm just unnecessarily I'm changing my initial plan, which I do not think I should do, right? So I'm not going to do that. But yeah, there is one thing that I would however consider doing though, which is I'll trail my stop loss to make it a zero risk trade. So in case this pullback is going to happen, and if it's again going to come mitigate the zone and then fall, then I'll enter the trade separately. I don't want to stay in the same trade because then it's a waste of a trade. Rather, what I can do right now is trade my stop loss and make it a zero risk trade. I at least make it break even. In fact, instead of break even, I'm thinking I can even secure a couple of, make it a 1:1 trade right here. And in case it comes to break out from that zone, so I can actually grab some profits. So now if you take a look, this is completely a zero risk trade right here. This is one of the 8 trades because now even if it goes to my TP or my SL, I'm still just going to be making money. But yeah, I trail the stop loss till this zone only because of the fact that if in case there's a major pullback coming, then it'll obviously try to mitigate the zone again before coming for the next fall, right? Because eventually it has to fall because of the bearishness of the market. But it doesn't make sense to let go of the entire profit because I'll again make an entry over there for better entry. But why not, even if you can get like a couple of points, why not just keep it? So due to that logic, I'm keeping it. And you can see right here, right, if I do move this will be a 1:1 trade. Wait, where is 1:1? Okay, 1:1 is here. So I'll keep this right here, so thus making it a 1:1 trade if the pullback happens. But that's if it is the stop loss. Otherwise, if it is a TP, then this is the target that we're going for. So we have set it. Hope I'm recording. Yeah, I'm recording. All right, so we'll just wait for the whatever minor pullback it is doing to get over. We will take a look at the 1 minute chart. Okay, this swing low, little breakout structure here. Now new swing low. Okay, it's still bearish, guys. There's nothing to worry about. Just forming the new high had been formed here in interior. I'm talking about the internal structure. So if the low, new high, if it has been formed, however there is one pullback right here. Let's see, one of these has to be the new high. After that, if it has to come down to lead to breakout structure here. So then we'll be good to go. So let's just see how exactly that trade plays out. Okay, right there. I keep the 5 minute candlestick on. All right. Right. So yeah, this minor pullback is obviously a little bit annoying. Because it literally touched our TP, but the order was not closed because of the spread. Because yeah, there has been a little bit space, so basically that's, it had to cover that as well for the TP to finally be hit, but order did not hit because of that reason. But that's all right. We the minor pullback is just how the market moves. So we were not able to close the trade in the entire free fall. Apologize for this noise. A lot of disturbance in my place right now. Anyways, that shouldn't be an issue. In fact, I actually do still feel. Wait. No, even after this fall, it did not take out the structure, right? Came back till here. Yeah, no, we're sticking with the TP. All right. Okay, so this from the pullback, this was the lower low, then new high, lower high, and this is the new lower low, new lower high. So next lower low formation should lead to, for this to become a valid high, lower high right here, for it to become a valid lower high right here, it has to lead to break of structure right here. So that is what it's going to target as that is what it is going to target as well. So once the market enters enough with enough volume right here, it'll target, it takes supply from this one. If it wants, it'll mitigate. So it mitigated this order block 1 or 2 times as well from here. So now one red candle in the 1 minute chart is more than enough to just take this out. I just said it and it just came. So one red candle, just more than enough to just take this low right here and lead to a breaker structure and completely take us in a take profit. So you can see that it's a very simple, it's not even a 1:5, 1:3. It's 1:3.5 trade, but it is not a 1:3.5 trade anymore because I even trailed the stop loss. So a very safe and good trade. Anyways, let's watch the TP